What role does asset allocation play in an investor's life?
If 95% of your total returns are being governed by one single aspect, then obviously it is the biggest part of your overall portfolio strategy. What we have realized over the last many years is that in India, the equities give you the best return. Okay, so we have designed this model in a manner that it wants to increase. It looks at increasing the equity allocation at the first available opportunity. Any switches between the asset classes, you don't end up paying a tax because the end investor would only be paying tax when she.
Welcome to today's episode. With markets facing heightened volatility and investors seeking stability, asset allocation has never been more critical. Today, we will explore how Kotak Multi-Asset Allocation Fund helps navigate these challenges, balancing equity, fixed income, and commodities to deliver resilience and long-term growth. Joining us today is Mr. Devendra Singhal, Fund Manager at Kotak Mahindra Asset Management Company Limited, who will share his insights on the strategy, performance, and why this fund stands out in today's environment. So let's dive in. Welcome once again to the discussion, Mr. Singhal.
Hi, thank you, Asta.
Yeah. So let's begin with understanding what role does asset allocation play in an investor's life?
Oh, it's humongous role. There have been various studies which have been there, which says that 95% of your total returns in a portfolio for an investor comes out of asset allocation. So if 95% of your total returns are being governed by one single aspect, then obviously it is the biggest part of your overall portfolio strategy. There could be nothing more important than asset allocation in an investor's portfolio and investment journey, but for asset allocation.
Yeah, and that's why it requires intensive planning as well. Like
Yes, of
really
course.
good strategies.
In fact, there have been so many studies, including there have been awards, Nobel awards, which have been given on studies which have been based on asset allocation, right? So it is a thorough professional job which one needs to do at it, and that is why most of the global fund manager or asset allocators pay a very very large attention to this entire process. Uh, Unfortunately, in India, we don't pay much heed to it, but it is a very very crucial and very very important part of any investor's journey for the longer term.
Can you also explain us what are the different asset allocation classes that an investor can look at within this fund?
See, first of all, asset allocation itself is, very, very misunderstood. I would come to the taxation part of it as to why multi-asset allocation funds, which we're talking about right now, are much more tax-efficient vehicles to do this. But first of all, if you look at the entire asset allocation, you put different assets where have different or low correlation among each other, right? So once you have a little correlation and then you move across asset classes, obviously you incur a transaction tax. So when you incur transaction cost, alongside you end up paying a taxation every time you do a transaction there. So with asset allocation strategies or in a mutual fund, you end up saving those transaction costs in terms of the taxes because you don't have to pay for every time you switch from one asset class to the other. You only have to pay when you basically come out of your overall portfolio out of this.
So, the Kotak Multi-Asset Allocation Fund has reported significant relative performance against its composite benchmark over the longer term. Could you share with us your investment mantra in detail?
So, Asta, we follow a very, very disciplined approach here. The entire asset allocation is based on an in-house model which we have developed, which tells us when to go overweight equities or when to go underweight equities, and same way with precious metals like gold and silver. So adhering itself, as I said in the beginning, 95% of our returns can be governed by just asset allocation itself, leaving on the individual pieces where they generate alpha. So this disciplined approach itself and a good in-house model which we have developed is working for us over the last many years. That is, I think, what would have developed this sharp outperformance which we have got in fund.
So, what has been the typical range of allocation across equity, fixed income, gold and silver, or other asset classes? And what's your strategy behind the same?
See, what we have realized over the last many years is that in India, the equities give you the best returns. Okay. So we have designed this model in a manner that it wants to increase, it looks at increasing the equity allocation at the first available opportunity. So typically, our model will have a higher equity allocation on a general basis. If we look at the past historic trends, then on an average, 70% is an equity allocation which we have in this model, versus now the lowest we have gone down obviously is almost 10%. But on an average, 70%. In the recent terms, it would have gone 45 to 85% or thereabouts.
We know that Indian equity markets have seen elevated levels of volatility within the last few months, of course, driven by both global and domestic factors. So, how do these shifts influence the asset allocation decisions within the fund?
No, in fact, the more the volatility in the market, the more important becomes the asset allocation. So, as I said, different classes have different correlation with each other. So, when the equities are highly volatile, then there can be times when debt does better, and when both of them are hazy, then there are times when the precious metals or bullions do much better, commodities do much better. Last 1 year, we have seen a massive rise in commodity prices, especially of that of gold and silver, right? So I think the model itself has actually helped us, navigate this entire journey pretty smoothly, and we have seen good results. But I think overall, as I said, Indian market or overall, we see equities to be the best performing asset class, followed by bullion, and then being debt thereabout. But return is not the only thing one should be looking at this. It's a risk adjusted return one should be more focusing on, and that is what this entire multi asset does.
So, Mr. Singhal, I also want to understand with you what are the different asset classes that an investor can look at within this Kotak Multi-Asset Allocation Fund?
Asta, honestly speaking, this is the best envelope for any investor to look at in terms of multi assets. Today, all the asset classes which are investable in the market, be it equities, equity arbitrage, debt, commodities, commodity arbitrage, international equities, and even REITs and InvITs. The fund is able and has a ability to invest in these asset classes. You know, so we have to have, because it's an equity taxation product, we can have 65 to 80% in equities and equity arbitrage, 10% minimum in bullions or commodities, 10% in debt, but the balance, because we need to have only 65% minimum in equities at any point in time, there's a 15% leeway which we could invest in, REITs and which international equities, commodity arbitrages, and so much. So this basically gives us a wide gamut of, assets which are available and have different correlations between each other to put that into this fund.
And of course, you need to do a little markets study at that point of time to understand which class you need to invest in that moment.
Yes, of course, because as I said, we do it based on a model which we have developed in-house, and basis on that and a view on the market, we use these different asset classes to navigate.
So, Mr. Singhal, now talking about the taxation. We know that different asset classes means different taxations, right? And then it becomes like the taxations become implicated for the investor. So, how does this particular fund eases that process and becomes different for the investor?
Oh, yes. Tax implication also is, this fund is very, very tax efficient in that manner, because any switches between the asset classes, you don't end up paying a tax, because the end investor would only be paying tax when she actually redeems her units 1 year, 2 year therein. And the actual tax incidence would be depending on what has been her duration of holding.
Okay.
If she's making it less than 1 year, it would be short term. But doing it post 1 year, it would be longer term. Having said that, any switches which we do within the year, the investor is not taxed therein. So it is very, very tax efficient to that manner.
Very, very easy for them, for sure.
Yes.
Right, all right. So thank you, Mr. Singhal, for joining us and sharing your knowledge and actionable tips on asset allocation.
Thank you.
We hope this discussion helps you navigate your investment decisions with confidence. Until next time, stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.